Hello. Welcome everyone to a new episode of the Defiant Weekly Recap with the Defiant Print team. I'm Cami Russo, the founder. We have Alex and Owen, our staff reporters, and YYC Trader, our head of news, leading this discussion of the week's biggest headlines in DeFi and crypto. So some of the things we'll be talking about is this week's rally in the market with ETH leading the way. We had it break 1900 for the first time since August, outperforming Bitcoin. And then the other topics we have are really roll up heavy with there was some Arbitrum governance drama following their anticipated airdrop. There's news on Optimism's upgrade. And Owen had a really good feature on analyzing roll-up token use case and valuation. So those are just some of the biggest headlines that we'll be talking about in the live stream. So we'd appreciate a like and follow. That way YouTube gods like us more. And yeah, share with your friends. And also use the comment section liberally. Make sure to ask us any questions about our reporting or any other comment you'd want us to highlight. And then before we get to it, I just want to give a shout out to our sponsor, Arch. They're sponsoring this live stream, so thanks so much. And stay tuned to learn how you can securely borrow against your crypto assets with this project. Okay, so leading the way is market's performance this week. Owen, you covered this with ETH crossing 1900. So what was leading the rally?
Yeah, so moderately quiet week in the markets, at least among the large caps, but we did see Ethereum cross 1900 for the first time since August, which was interesting because we saw Bitcoin hit a 9-month, so Ethereum hit a 9-month high, and then we saw Bitcoin hit a 9-month high. I think it was about 3 weeks ago on the back of a lot of the bank failures that we saw. So it seems like ETH, trailing by 3 weeks, at least in terms of that very small 9-month high metric. So that was kind of a, it's interesting, as most folks watching probably know, Ethereum is going through its quote unquote Shapella upgrade next week on April 12th. So we're wondering which way people think ETH is going to swing once withdrawals unlock, and I mean a lot of people are wondering that. I'm not sure if I don't know. Yeah, so that's what's happening on the ETH side. I mean, I'm sure there's a more sophisticated analysis to be made with regards to perp funding and what options are saying. And then outside of ETH, we had Dogecoin, the very sophisticated financial asset that it is, up 10%. I think that's good for the most among any asset in the top 100 in terms of app, and that's largely off the equally sophisticated move by the Twitter team to replace its logo with a Shiba Inu. So that's very high level take of what we're seeing in the markets right now. Filecoin is up this week. It's up 5.1% today. Roll-up tokens are holding relatively steady, kind of despite the story I wrote yesterday. So, that's the high level. I don't know if YYC is, he's our real market master. So I don't know if you're seeing anything more sophisticated than I am, but that's my.
A few things. I mean, we had the jobs report this morning, right? That came out. That was stronger than expected. So we're seeing markets pull back a bit today. The dollar is up because strong jobs report means the Fed has license to hike again in May at the next meeting. So I think that's what's been driving today's action, at least. But yeah, in terms of the rally, people are betting on a successful Shanghai upgrade,
Yeah.
is what it looks like. And yeah, we put out an awesome video about the implications of all that ETH being unlocked, right? Essentially. So check that out if you haven't seen it already.
Right on. Yeah, I kind of put you on the spot there.
Yeah, so rally leading up to these Shanghai and Capella upgrades with ETH, state ETH being unlocked for the first time in 2 years, is it? And so we're seeing kind of this ETH, ETH outperformance versus Bitcoin. And we have here this bit about Bitcoin dominance also. It was it was sliding to some. Do you remember, Owen, what the low was for the Bitcoin dominance? But in any case, it was losing some ground after gaining all through last year in the bear market, as Bitcoin often does. People fly to the digital gold in crypto. So interesting that there is some real market reaction and expectation ahead of this major upgrade that will allow validators to unstake and withdraw their ETH. So yeah, we'll see whether that continues to drive ETH, or as YYC mentioned, it'll be back to macro driving crypto with this expectation that the Fed will, may continue to hike its, rates and be on its more hawkish path as it was in the previous months.
It just one thing to add, Cami. So that article went out on April 5th, and at the time, the FedWatch tool had a 56% chance of. It looked like it was 56% chance of rates not going up, but now it has readjusted, perhaps per the job report, which YYC talked about. So now it's looking like 67% of a chance of a 25 basis point hike. So just to give you guys the absolute latest on data.
Yeah, so we're back.
Yeah,
I think it's a bit too early to say that yes, just because the jobs report came good, the Fed's going to hike, because we also have the banking issues in the background, right? They haven't gone away, and higher rates is what caused the mess in the first place, right? Because banks' bond portfolios are worth a lot less than they were just a year ago, because rates have come higher so quickly.
Yeah,
that also might play a role in the Fed's mind, But again, seasonally, we're approaching, the sell in May and go away period. So it might just so happen that they decide, all right, we still need to get inflation under control, and let's roll the dice with the banking system.
Yeah, I did talk to kind of an investor last week, and he saying that, just that the banking crisis hasn't gone away, and that, there's still a kind of a disparity between the deposit rate that banks are offering. I'm not sure if he's talking businesses or just individuals, but relative to what's happening with treasuries. I mean, we don't watch that super closely, but it will be interesting to see if the bank crisis is kind of continually a slow motion train wreck, as it may well be. So we'll see.
Adam Wild is saying banks going under is a great thing for crypto. Yeah, I don't know. What do you guys think?
I don't think crypto will be unscathed if the banking system or the we have a repeat of 2008. I don't think anyone wants that, to be honest. We'd probably see everything taken to the woodshed. So,
Yeah. Yeah, it was interesting to see that Bitcoin pump coming out of the bank's failure, because we were, I think Cami said it a couple live streams ago, but yeah, we were waiting on that Bitcoin, value to prove itself during highly inflationary times. It didn't really show up. So it's interesting to see people kind of betting on Bitcoin as potentially this counterpoint to the banking crisis. So maybe it helps Bitcoin and other assets. I'm not sure. I'm not sure.
I think it may be too early for it to be a good thing for crypto. I think, if we, or when we get to the point that there is a functioning crypto-based economy, and people are, most people are earning their salaries in crypto, and there's there's just taxes being paid in crypto, and you don't need to go to fiat at all, and you can just live your life with Ethereum or Bitcoin or stable coins, then maybe, like a final push from fiat to crypto by like a huge bank failure would be a good thing for the space, if you could just like continue functioning in kind of the blockchain world. But in the case where that's not happening yet, and you still need to live, at least most people live their lives in fiat, and you need these like on ramps, then I don't think something like a crisis will be good for crypto. Unfortunately, I think it would just push people to more stable assets. But we'll see. Like Owen was saying, it was surprising to see that the failure of these three banks did spark a Bitcoin rally, and I think that also coincided with stable coins losing their peg. So that also pushed people to Bitcoin, I think, because I think naturally in times of crisis, people in crypto would go to stable coins. But since at that time stablecoins were also seen as risky, then Bitcoin was kind of the biggest winner. So yeah, it was a surprising move. So I think it's hard to predict what actually will happen when one of these big events and crises unfold. Oh no, we lost Owen. Are you guys funded by SVB? No, we're not funded by SVB. We did have some cash in SVB, but we were able to recover it. So that was an interesting time for us. But we're all good. Bitcoin price is going up regardless what I say. I agree. I have no impact on the Bitcoin price. I wish I did. I wish I could.
Oh,
just
don't be so
Bitcoin.
modest.
Yeah. No, I think long term, obviously, we're all here because we believe in the space. We think long term, or at least I do, think that crypto will continue gaining adoption and gaining in price. But I'm just saying, like, whenever there's a huge economic crisis, people just fly to safety, and crypto is just seen as a risk asset. It's just extremely volatile. So it's hard to say that that'll be good for crypto if there's a big banking crisis.
Yeah, we're seeing that with the rally in gold, right? It's above $2,000 an ounce again.
Yeah.
So that is definitely a flight to safety trade, right?
Yeah.
And we have the bond market kind of showing kind of signs of jitters, right? Like the bond market VIX is kind of at an extreme level right now, pricing in like some sort of event happening in the next 30 days, or at least options traders are very nervous about the next month. So that obviously coincides with the next rate hike, this whole banking crisis, if you want to call it that, that's going on. So yeah, should be an interesting month.
Yeah.
And we have tax time in the US as well, right? So we generally see some selling as people sell to kind of cover their obligations. But again, most people probably lost money in 2022, so no taxes.
Yeah, we were laughing about this tweet by Bloomberg saying nobody paid crypto taxes for 2022, and like the comment section is just filled with people saying nobody made any gains last year, so there's no taxes to pay. Switching gears, we had lots of drama around Arbitrum. Alex, you covered that story, super interesting. Governance story there.
Yeah, it's interesting because it's like a reminder that even if you're a $1 billion company with access to some of the best advice, legal and otherwise, in the world, that you can still trip over your own feet when you're trying to decentralize and hand control of a protocol off to its quote unquote community. So for everybody who doesn't know, Arbitrum launched its token, ARB, a couple of weeks ago. A lot of people have been waiting for this. It's a big deal. Arbitrum is the leading protocol in the layer 2 space. It's got about 2/3 of the market there. And the technology is great, right? There's a reason that it's like a clear first in the L2 race. Releasing the token was the big step toward decentralization. Now all of the people who were eligible to claim tokens would have a vote and a say in where Arbitrum goes from here. The company that built Arbitrum, Off-Chain Labs, was kind of, it's like when the mama bird pushes the baby bird out of the nest, right? The problem is that the very first order of business that came before the newly formed Arbitrum DAO, essentially what was being asked of the DAO some of it had already happened. So part of the idea for decentralization was there would be a DAO that makes decisions, but then there would be a foundation that helps to execute some of those decisions. The foundation would run a grants program. It would help people building on Arbitrum by distributing tokens to them and stuff like that. The foundation was asking for 750 million tokens, which is worth about $1 billion. It seems as though those tokens had already been set aside for the foundation, and 50 million of those tokens had already been sent to Binance. 10 million had been sold and used to pay off debts the foundation had already accrued. So essentially, the foundation comes to the DAO and says, hey, could we get your permission to do X? And it turns out they had already done that. So, folks in the Arbitrum community saw it as a sham vote, were outraged. Arbitrum has been chastened. It's come back since and said, look, we screwed up. We didn't communicate this well. It wasn't really, we weren't asking permission. We were asking for ratification of something that we thought we had made clear we were going to do. Why they chose to go that route, why they thought ratification was the best way to handle this is still a mystery to me. But Arbitrum is going to break. It was a big proposal. The $750 million for the DAO is just part of it, and so they said that they're going to break up a lot of the parts of that proposal and reintroduce them as separate things to be voted on. They've also committed to greater transparency around the foundation's activities. One of the issues was that the foundation would be handed $750 million tokens with not much of a sense of, how it's using that money, how exactly people can keep track of it. So, it's committed to regular transparency reports. It released essentially like a budget proposal saying, we estimate that we're going to need about $36 million a year. Here's why. And it's kind of like, it takes a while to build up trust. Arbitrum had earned that over the years with fantastic technology, and it's why people had really looked forward to the airdrop, and it kind of screwed that up. It stumbled right out of the gate, and now it's going to be a bit of a slog to see how much of that it can win back through ongoing governance.
Yeah, I think, it was really surprising to see just the controversy around this first vote. Like you said, Alex, it's a company or an organization that just has so much experience in the space and had so much trust from the ecosystem, and it just botched it so quickly right out of the gate from their first proposal. I think it's like we've talked about how it's easy to lose proportions when you see so many kind of big money numbers in all the stories we report around crypto and DeFi. But it's worth highlighting, they were assigning basically themselves, or at least they were assigning to the Arbitrum Foundation $1 billion, and they just like took 750 million. That's a huge amount, and I don't believe there was enough disclosures on how exactly those funds would be used, like what accounts for 750 million. So yeah, I think it just highlights how DAOs should, the whole idea behind them was it's a more transparent way of organizing people. It's a more transparent framework for setting up companies. So let's demand that from the biggest DAOs in this space. They should be more transparent on how they're using and spending money for a key piece of infrastructure in this space. The other thing to note is that most times these funds are just allocated beforehand and they don't even go through a vote. So that's a caveat there. I mean, at least they were asking for, even in this kind of shady, like offhanded way, they were asking for permission to use these funds. Most times you just see that tokens are allocated, that a piece of the supply is set aside for the foundation. And nobody kind of says anything, and there's no discussion about it.
That's what's so funny, though, is that had they done that, nobody would have cared, right?
Exactly.
Like when they say from the get-go, here's the breakdown, I mean, what say does anybody else have, right? It's like, okay, well, that's their decision to make. That's the breakdown. We accept that. But when they say the breakdown is, the community gets this much, investors get this much, and then the DAO gets 4.25 billion tokens. And then when you actually look at the DAO Treasury, there's only 3.5 billion because they'd already separated out the other 750 million. It's like, wait, so you pulled a fast one on us, right? But it's and I think I buy the explanation, like, oh, it was just a failure of communication. We made it clear in these things, but like nobody really looked at that, and it also kind of contradicts stuff we said elsewhere, so it's on us. We screwed up. We should have communicated better. That makes sense to me. I don't necessarily think that they were doing anything super shady. They communicated poorly and made the inexplicable decision not to just outline that distribution before the actual token launch, because then it wouldn't have been controversial. I mean, one of the things that they point out, and this has been confirmed, is just how an ecosystem foundation is standard among L1 and L2 blockchains, right? And the amount that's actually been set aside for the Arbitrum Foundation is in line with or less than the percentage of tokens that have been set aside in other cases. So I think Polygon and Solana, for example, both have foundations that received a greater share of their respective tokens. I believe Optimism's was around 5%, so a little bit less than the 7% that the Arbitrum Foundation got. But it's like, none of this is unheard of or unusual. It's just that the way they went about doing it.
Yeah.
To me, it's an inexplicable move, to be honest, because if they had just put it in the allocation before they handed out the free money, no, like you said, no one would have cared. Everyone would have been happy with the airdrops. They like sentiment to Arbitrum changed so quickly in just 1 week, right? Like before this whole debacle, it was no one. They could do no wrong, essentially, right? So even from just a marketing and optics perspective, it just makes no sense. Because now, like the governance process will forever have this, the first proposal is tainted or failed, right? You can't change that. Even though I believe they're trying to like remove references to AIP1 from the documentation and stuff, but the vote will always be there, right? It's on snapshot. So, I mean, it's not technically on chain, but yeah, it's always going to be there as a reminder.
Yeah, and that's a good point. Why I see the proposal itself, it went up for a vote, and I think at the beginning of last weekend, it looked like it was poised to succeed, but after it got all this attention over the weekend, the tide quickly turned, and it failed on Monday, I think with 76% of people who had cast votes in opposition. So
yeah.
That's another thing. They never announced the vote or like publicized it or made an announcement or anything. So which is why no one even knew about it until, like you said, it was like picked up and on social media, and then everyone started talking about it, right? And those initial 20 odd million votes in favor, I don't know who they came from, but they were all big wallets, right? So
yeah, I wonder if they realized they made a mistake and just wanted to push it through real quick, and then get to more, I don't know, more public proposals, because it is like, your first proposal should have like some degree of ceremony in a way, right? Like, here we go, like let's run this decentralized organization
booth where you get to put your
all they
ballot in,
needed
free
to do-
donuts at the table.
I want a sticker or something. I want an
I want a sticker.
totally a failure in communications. If they had just,
Giving out
made it
stickers.
like a big deal about it and said, "Hey guys, we just gave you $1.5 billion in airdrops. Now let's get this foundation up and running," and like actually ask people to vote, it would have gone through. I'm pretty sure it would have just like sailed through. In fact, if they had just done it.
That's interesting.
If
it wasn't even
had
about the
been better.
vote. It was kind of slid through in like a funny way. Yeah, because like you'd think it would like end up on their Twitter profile or something. Like, hey, here's our first vote.
But do you think it was just the fact that people weren't invited to vote, or this issue with the funds allocated to the foundation, like just this being buried in the proposal?
It wasn't really buried. I mean, the proposal was up since when? The 15th or 16th of March? Even like a week before.
From the moment
airdrop,
that the airdrop had been
right?
announced, that proposal was in the
If
governance.
someone was really, that involved and wanted to keep on top of things, they could have read it, and this could have been flagged way back before any of this happened, right? But I think that was the main thing that people took offense to, was that it felt like, even if it was unintentional, it felt like it was being slipped through, on a weekend without any announcement. So it just felt like something shady was going on, even though there might not have been.
Yeah. Adam is saying, how many people get in crypto to vote or govern?
Question, Adam.
Yes. Yeah, I think this is a problem. Like, it's true. Yeah, like the vote was put up And nobody, I think, or very, very few people who got the airdrop actually took the time to read through the proposal, and I don't think they were planning to participate in this governance. I mean, we see just the low participation numbers for DAOs across the board, and it's an issue, and it really connects to the story that Owen wrote this week about right now these tokens. Most of the tokens in DeFi, the only thing they offer is governance rights. And governance for what? Like it's a use case that nobody even, or very few, take advantage of. And that's what is giving them these billion-dollar valuations. So there's a big disconnect there. Like the market is assigning such a huge value to governance via these tokens, but token holders aren't really enforcing it or using this at all. And it was seen clearly here because this vote was put up for weeks. Nobody even noticed, that the content of the proposal, and then it took, I think it was the Blockworks kind of holder, I think, right? They were the ones who highlighted that there was something, there was this amount of money being allocated to the DAO. So yeah, it's basically it shows that DeFi and DAOs aren't working the way they're supposed to, I think.
Yeah, I mean, it's just so hard. Like, I mean, I don't know. There are people who could talk about this, I think, in a much more sophisticated way, but it's like, I don't know, just like these are very hard decisions, right? Like, I mean, like you traditional company like financial analysts and CFOs to make all these decisions, and it's just kind of, and there's a reason you have, from my understanding, like a board of directors who pays close attention, and you kind of delegate voting power and stuff to these organizations, because it's like most people don't quite have the time to kind of be able to kind of make these sophisticated decisions. So I mean, I think MakerDAO is working on like kind of a sub DAO model, so you break things down to maybe like pieces that an average person could kind of have a informed vote about. But it's like, I mean, it's the same with voting in the United States. Not that many people vote, and it's just like it's a lot of work to be an informed voter. So yeah, it's just it's a tough problem. I don't like smash on Arbitrum exclusively because it is just like it's a tough nut to crack, and I've ever tried to launch a DAO. So anyways.
Yeah, absolutely. I think there's been this movement toward delegating your tokens for like professional voters. I think it's kind of like DAO politicians, and I think that's a good move. Like the everyday person doesn't have time to be looking at all the proposals and studying them closely and participating in all the votes that they're supposed to. So I think delegating your tokens to someone you trust will look after your incentives and have that person be basically their job to be on top of governance decisions. I think that'll be a good move, and we've seen that happen more and more across DAOs.
That idea of the DAO politician is very apt, because I see these professional delegates, and they exist on several blockchains at once, right? Like this really is seemingly their business, and they'll show up in a governance forum and say, this is our platform, just the way that a political party or a politician would. And it's really interesting because it's like, I might own some governance tokens as an investment, but then I also care about the protocol and what happens to it, and believe that decisions made there will impact my investment. But I'm just a guy. I have no idea I don't know anything about tokenomics, about like all of these like weird in the weeds mechanisms that the protocol uses to get better or whatever, right? So it's like you kind of need people like that.
More specialized.
Yeah.
Before
I'm
we
going to
get
start a
to
platform.
the
I'm going to become a delegate with my platform will be I will vote for whatever pumps your bags the most.
That's
I'm
what you're
sure you
supposed
get
to
lots
do.
of yeah.
That's what you're supposed to do. I mean, that's what for shareholders in traditional companies, pump those bags, man. Anyways.
Yeah. Okay, before we get to the next story, let's give another shout out to our sponsor, Arch. There's a quick video where they'll show how you can leverage your crypto with them.
Seamless loans for alternative assets. Introducing Arch. Arch enables you to obtain a single loan collateralized by your combined crypto holdings, all held securely and untouched by the #1 SEC-regulated crypto custodian, BitGo. Choose between loans denominated in fiat US dollars or USDC stablecoins and experience the confidence and flexibility that Arch provides to alternative asset investors.
All right, thanks again, Art, for sponsoring the weekly recap, and all of you other projects, teams out there who are looking to get your message out to your audiences, reach out to us. Okay, and then we have more rollups news this week with Optimism getting ready for a major upgrade. Alex, I know that Sam had this story, but do you want to give a brief overview of it?
Yeah, so Optimism's got a big upgrade on the way. It's called Bedrock. Folks in the Optimism team have been talking about it for a while, and the shortest version of what it's going to do is it's just going to make Optimism better. It's going to reduce the fees for transacting and using the network. I mean, that's the big use case of an L2, right? Is that it's much cheaper to use than Ethereum. So Optimism is already much cheaper. It's going to make it even cheaper than that. And then separately, it's going to make it more EVM compatible, more compatible with the Ethereum virtual machine, meaning developers who are building on Optimism will have to do less work to move an application that already exists on Ethereum over to Optimism. They're going to have to tweak the existing code less. And, that's the degree of EVM compatibility is just like a huge issue for L2s, right? The easier you can make that, the more seamless you can make it for developers to move an application from Ethereum to the L2. You're just going to have a much easier time attracting developers, attracting applications. And no matter how performant a blockchain is, it's no good if there are no applications on it, right? That's like the name of the game. So, I think the Optimism community is really excited about that.
Nice. So Optimism and Arbitrum are the biggest scaling platforms out there for Ethereum. They are the biggest layer 2 tokens out there with OP and ARB. And so Owen dove into the valuations of these two tokens, which together have market caps of 2 billion, but like we were saying, the only thing that they offer is the ability to vote in governance, and that's what's kind of driving these valuations. And so the question is like, is that justified? Owen, do you want to talk about this story?
Yeah. So yeah, I mean, we talked about a fair amount as a team internally, just kind of trying to pound or kind of, trying to grind out what this story was about. Because yeah, I mean, now that Arbitrum launched, you have this, I mean, like Cami said, Optimism and the ARB tokens are worth collectively now fully diluted value is over 20 million. And
Billion.
And you have all these, more ZK EVMs launching. Like there's like the Optimism has the super chain, which I'm not super up on it, but like I do understand that that's going to increase block space, so that there will be more and more roll up and layer 2 solutions which are secured by Ethereum, and so it kind of seems like this big gold rush going on, but there's just like a lot of competition coming, and just like looking at these token valuations, it's like, what supports them, and right now it's fairly ambiguous. I mean, it's basically it's governance, and as we talked about, that's not necessarily the most compelling, and just like there's no cash flow, right? It's like for a while, I think you still can, but you could stake sushi, get X sushi, and then you get a portion of trading fees. And so we dug in and talked with some people about what are you really getting here, because you're not you're not paying the transaction fees in ARB or Optimism or whatever, and you're not staking those tokens to like get access to be able to like run a sequencer, because all the sequencers are centralized right now. So it's just like it's arguably the tokens are overvalued currently, given like the current situation. I mean, there's like so much you could say about how things could change, like especially with how things are marketed. Like, because the whole backdrop of this is the SEC, and I'm not an expert, but like I know that adding an element whereby you can profit from a token, from my understanding, is much more likely to expose people to I think being classified as a security, if I may. I'm not a lawyer. So that was basically what we were exploring. I'm not sure if I kind of tripped over my own shoes in explaining this, but and so it was just kind of interesting talking to a lot of people about potential use cases down the road for the tokens, and and kind of how these layer 2s are making money, because they are certainly making money and they have users. But how does that connect to the token? And I think Cami used the word disconnect. I think that's a good one, of just like, there's this feeling, and I'll get off my stuff preaching, but like, like there's this feeling that like tokens are stocks, and like I think we just like conflate those in our heads still, and it's like they're not, so like they don't necessarily right now like give you access to the profits that come from the roll-ups. So anyways, just kind of interesting exploring that, and it'll be very interesting to see where things go from here.
I think the expectation is that with governance, you'll be able to vote your way into getting access to those profits. I think that's kind of the expectations that people have when buying these tokens. It's like you look at this chart, you see that, wow, like these platforms are, they have more activity than Ethereum. They're making money from activity on these platforms, and at some point, when there's more regulatory certainty, when the sequencer is decentralized, or whatever, you'll be able to maybe make a governance proposal that says some amount of those fees go back to token holders. I think that's kind of the general expectation, but it's like when and if that will happen. There was an interesting comment in your story that says the reason why none of these sequencers are decentralized is because it's technically very hard to do. And maybe you can explain a bit, what actually is a sequencer? Like that's kind of maybe.
Yeah. So at a high level, a sequencer is like, I think it's a node, which are basically, Bitcoin runs with a bunch of nodes, as does Ethereum. These are a collective which are processing blockchain transactions, and adding them to like the literal data structure that is a blockchain. And so a sequencer, in the context of a roll-up, is, from my understanding, it's kind of like it's a privileged node, which is ordering all the transactions together, and then I believe posting them to layer one as valid transactions. And so in so doing, it actually collects fees, and I think also is able to benefit from fee. That's what I talked to David Mihal about that. So those are the two sources of profit from the sequencer. Hopefully that explanation was good. Yeah.
Yeah. So the idea is that if you decentralize that, then token holders will be able to become validators in this sequencer and get a portion of those fees and MEV revenue. But so far, that's not the case. All sequencers for layer twos, or at least for Arbitrum and Optimism, are centralized. And right now, the only thing that the tokens give you access to is governance. Which, it's really worth noting it, because it's really like the path towards getting some portion of those profits is really uncertain. So,
yeah. I mean, and Uniswap has made some moves towards that, right? Like they're DeFi's biggest token, and right now they're still just for governance, and they're working on the fee switch, and they're trying different things, but it's slow. Like Uniswap has been around. I mean, arguably they didn't want to launch the Uni token and Sushi forced them to, but they've been around for, I mean, what? It's like, 2.5 years now. So it takes a while to, I don't know, get something going that might actually generate revenue for a token holder. So.
Yeah, for sure. So yeah, definitely something to watch, and not just for ARB and Optimism tokens, but I think this is a question that should be analyzed more across DeFi tokens. Like the business model and token valuations aren't very clear right now. This is such an emerging space that there are no fixed models in place on how to value these tokens, and sometimes, like you take for granted that they will somehow be able to pass through revenue over to token holders, but it's not very clear. So I think this will be just like an ongoing analysis that we do on various kind of types of tokens, like what's the business model, where do they get their value from, and I think it's like, I think people, or like less like not non-professional traders, will just buy a token because they like the project, or the protocol is doing well, without doing much analysis. So it's worth just taking, just double clicking into kind of, okay, how do these tokens actually work?
100%. Yeah.
So moving on to a different topic, really interesting as well. Alex, you dug into this report by the U.S. Treasury, and some things were, expected. They were saying all DeFi protocols are money transmitters, but some things were less expected, which, it looks like the U.S. Treasury is bullish on CK proofs, which was interesting to see. So what's that about?
Yeah, I'm really interested in zero knowledge technology and blockchain privacy. And last summer, when the U.S. government had sanctioned Tornado Cash, and when Dutch authorities arrested one of the Tornado Cash developers, it felt as though there was this war that was being waged all of a sudden against people who are building privacy-enhancing technology. And at the time, I interviewed a bunch of people in that space, and the refrain that I heard wasn't one of defiance. It was more like, we can work it out, right? Like, this technology actually can be something that the government can embrace. We have these things called zero knowledge proofs, which make it possible to like stay private, like totally private, the way if I send a message on Signal, Signal can't even see my message, right? To stay totally private, but also to comply with regulations. Compliance typically reveals or requires sharing sensitive data, name, account numbers, ID numbers, stuff like that. With zero knowledge technology, you can prove certain things without actually having to share the data that proves them, right? It's a pretty far out concept. And this was the industry's line. And to my knowledge, I might be wrong about this, this report that came out from the Treasury Department this week was the first time that I saw the government agree, right? To see the government say, yeah, no, actually that's right. Like, we can work together here. We can figure something out. And it was very deep within the report. It was not exactly a throwaway line, but it wasn't something that the authors lingered on. Nevertheless, they say we need to. There's a risk within DeFi of sanctions evasions, money laundering. How can we address that? Well, there are a couple of things. Regulators can get more aggressive in monitoring DeFi protocols and suing them if they feel like they're not compliant with the laws that, in their opinion, apply. But then we can also promote compliance-enhancing technology like ZK proofs. So it's interesting. It's that news is maybe bittersweet, right? Because it's pointing towards a kind of like a crypto-friendly solution, right? Like a crypto-native solution to this problem of the lack of compliance within the DeFi space. The fact that, like, if you're using just about any popular DeFi protocol, the only point at which you were required to KYC was when you probably purchased the tokens, and that's only if you're living in the select few countries that actually require that for the financial institutions, right? If you're in, say, China, you don't have to actually furnish some of that data, is my understanding. So it's a crypto native solution at the same time among like really hardcore advocates of user privacy, like really hardcore libertarians. It's almost like a worst case scenario where you can build this proactive compliance into everything, and then it becomes actually really easy for the government to dictate who can and can't access certain protocols, because it's like you don't have to give up your privacy, but if you don't meet the requirements that are built into the protocol, well, it can automatically reject you, and there's no way around that. Is that making sense?
Yeah, I think, it's interesting that it could be a crypto native solution for DeFi to be compliant to US money laundering laws, but at the same time, by applying these technologies, you just potentially end up restricting a lot of people and making the tech not as permissionless as it was supposed to be.
I mean, then it's not permissionless, right? It's because if you're doing the anti-money laundering KYC, combating financial terrorism stuff, then you're getting checked, and you can only access certain things if you pass the check. I mean, that's effectively what the system is today. Like, sometimes there's some really like egregious abuses of power where certain random people, for whatever reason, can't create a bank account because they, some overzealous, person at the bank didn't think they qualified, or they can't send money somewhere for whatever reason. And, so there's stuff like that, but it's like effectively be recreating that permission system that we have today. It would be totally different in other ways, but the permissionless aspect would no longer be one of the features of DeFi.
Yeah, I think at least in this case, by using zero knowledge technology, you wouldn't have to KYC with the DeFi protocol, right? Like it would be there would be like a list of sanctioned addresses, entities, people, and then you'd be able to show a hash, like a cryptographic proof that you're not on that list in order to use the DeFi protocol. So I guess like at least there is, your privacy, your information is preserved. You don't have to give up your information to do this, and you can still just transact in a non-custodial way, because otherwise, like if DeFi has to comply with KYC, then it's really not DeFi. Like then you have to really have a middleman taking people's information, doing cross checks in order for users to access protocols. But in this way, at least you maintain the non-custodial aspect of DeFi, and you preserve people's privacy. So it's it's not perfect, but I think
it's a compromise.
Could be a good middle ground. Yeah.
No, some compromises were probably going to have to be made. The report also very briefly touches on what I guess I'd call the crypto dream, right? The report notes that there are several challenges when it comes to anti-money laundering within DeFi. One of the growing challenges is the fact that it's becoming more and more, it's still super rare. I think everybody knows that, but it's becoming more and more common for people to be able to use crypto to actually pay for things. And in a world where everything is kind of happening on chain, then the whole anti-money laundering thing, the government would just have to throw up its hands and be like, all right, we lost. Because right now its main way of checking if somebody is or is not like a terrorist or a crook or something before they access crypto is when they buy the crypto through a centralized exchange like Coinbase, right? That's like the choke point, so to speak, where they can actually kind of do the screening. So they're clearly not thrilled about that, the growing adoption of crypto as a means of paying for goods and services.
But I wonder if you can take a more like a tech-centric approach to just like the entire process of not just like this aspect of using zero knowledge proofs to see to do AML checks, but just if the entire economy is on chain, you could have more like crypto native solutions across the board, and maybe it's even useful for law enforcement to have everything be on chain, because like you can track an address's transactions. You can it's just like it's harder to hide money that way if everything's on chain. As long as you identify who an address belongs to, you can have like the entire financial history,
assuming that it remains public, right? So it's like they note that one potential issue is going to be private blockchains. And so the first thing that comes to mind for me is Aztec, which is building its Ethereum rollup that's meant to be fully private. So it's like that's a situation where, absent certain other technology that's built in, it would be like, oh yeah, we can't actually see the transaction history of people who are using that network. Now, Aztec also happens to be one of those companies that told me we can have our cake and eat it too. We can build in this technology to essentially make it possible to prove you're not a bad actor without giving up that privacy. So law enforcement in that situation might not have access to a whole person's financial history, but they would know.
I think it's like you have access to some pieces of information, right? It's like, you know that they were like an address transacted with another address, but you can't see how much that address holds or like what the amount. So it's like Zcash works the same way. So you can see some information, but not everything, like on Ethereum and Bitcoin. So I think that's, I think it can work. Like I'm optimistic on this report. I think is a reason to be even more optimistic of like law enforcement actually seeing the benefits of crypto and not just kind of the how you can kind of be shady with it.
Yeah.
So yeah, I think we're coming up on time, and I'll just do a quick run through the other headlines that we had this week. So we had Layer Zero raising its Series B round valued at $3 billion. Really interesting proposition. This project that wants to make different blockchains interoperable. We had Gem NFT aggregators rebranding as OpenSea Pro. PancakeSwap v3 launching on BNB. So this is basically a copy of Uniswap v3 coming just like a couple of days after the Uniswap business license expires. And finally, there's this new kind of next generation of DEXs that's order book based instead of liquidity pool based, coming to different L2s. So yeah, really interesting week, layer 2 heavy week with market action around ETH leading up to the upgrade. Anything else that I should add, or do you guys want to add before we wrap up?
I think I'm good. I think we hit main topics.
Yeah, I think we're good. With the OpenSea announcement, everyone who's used Gem in the past can claim a free NFT that's trading at around 0.04 ETH. So if you have and you haven't claimed it yet, go for it.
Nice. All right. Thanks everyone for joining us, and yeah, we'll see you again next week. Have a great weekend.
All right.
And